Welcome to The Explainer. You know, every insurance policy you own, it's really just a promise, isn't it? A promise that if things go sideways, you'll be financially protected. But who makes sure that promise is actually kept? Today, we're cracking open the official rulebook for Indian insurance to find out who's in charge, how the system protects you, and what you really need to know before you sign anything.
Right, so let's get down to basics. What is an insurance policy really? If you strip away all the jargon and the paperwork, at its very core, it's a promise that's built on one simple thing: trust.
You see, at its heart, insurance is so much more than just a product. It's a contract, a deal. You agree to pay a regular fee, that's your premium, and in return, the insurance company promises to have your back and cover your losses if something unexpected happens. It's a simple idea, but honestly, it's one of the most powerful tools we have to manage risk and secure our futures.
Okay, but here's the big question, right? This whole thing works on trust. So who's the referee? Who makes sure that when you actually need to cash in on that promise, the company holds up its end of the bargain? Because, let's be real, without that guarantee, the entire system just falls apart.
Well, in India, that official guardian, that referee, they have a name. They are the ultimate rule keeper, making sure every single player in the insurance game, whether they're a massive company or a small one, plays by the book.
And that answer is the IRDAI, the Insurance Regulatory and Development Authority of India. They've been around since 1999, and their job is to oversee and control the entire insurance landscape in the country. If there's a rule about insurance in India, you can bet it probably came from them. Now here's what's really interesting. The IRDA is doing this constant balancing act. They have two main jobs that they have to juggle. On one hand, their number one priority is to protect you, the customer, and make sure you're treated fairly. But on the other hand, they also have to help the industry grow in a healthy, stable way.
So how do all these high-level rules actually affect us in our daily lives? Well, let's look at the one place most of us deal with insurance: out there on the road.
All right, this one is huge. The Motor Vehicle Act of 1988, it lays down a non-negotiable rule. If you have a vehicle in a public road, you must have at least third-party insurance. This isn't just a suggestion, it's the law. And driving without it can get you into some serious trouble.
Now, this act did something pretty revolutionary. It brought in this concept called no-fault liability. See, traditionally, if you were in an accident, you had to prove the other person was at fault to get any money. And that, as you can imagine, could lead to endless court battles. But under this act, if there's a death or permanent disability, compensation gets paid out fast, no matter whose fault it was. It's all about getting help to victims right away.
And the law doesn't stop there. It actually sets specific, fixed amounts for these claims. You can see it right here: 5 lakh rupees for a death, 2.5 for grievous hurt. Now, why do they do this? It's simple: to cut through the red tape and arguments and get that crucial financial support to families as quickly as humanly possible.
But then you have the absolute worst-case scenario: a hit and run. The accident happens and the person responsible is just gone. You've got no idea who they are or what their vehicle was. So what then? Is there any help at all?
The answer is yes. Even in these really terrible situations, the law provides a safety net. For a death in a hit and run, the compensation is 2 lakh rupees. For a serious injury, it's 50,000. The point is to make sure that the victims and their families are not left with absolutely nothing.
So you might be wondering, where does this money even come from? It's paid out of something called the Solatium Fund. Think of it as a collective emergency fund set up way back in 1989. It's funded by both the government and all the general insurance companies chipping in together to provide a little relief when it's needed most. So you can see the Motor Vehicle Act is a really strong safety net for us on the roads. But, and this is the key part, that's just one piece of a much, much bigger legal puzzle. The regulatory framework is massive.
I mean, just look at how far this web of laws stretches. You've got all this stuff moving around the country, right? Well, there are specific acts for goods on ships, on trains, all to protect businesses from loss. And then you have these foundational laws for employee welfare, making sure workers are covered if they get hurt on the job. And for public safety? Yep, there's a law for that too, like the Public Liability Insurance Act. Each one is a specific tool for a specific job.
But wait, there's more. It isn't just the government setting all the rules. The insurance industry itself also has its own way of keeping things in check and making sure everyone is following best practices.
See, every single insurance company in India has to be a member of this body, the Insurance Association of India.
It's kind of like their own internal club for making sure everyone is on the same page and working together.
And this association is basically split in two. You have the Life Insurance Council, which, you guessed it, handles everything to do with life insurance. And then you have the General Insurance Council for pretty much everything else. Your car, your health, your house, you name it. The idea is to have experts setting the standards for their own specific fields.
So, what's the bottom line here? It's that insurance isn't just something you buy off a shelf. It's a whole regulated system with rules, referees, and safety nets. And knowing how it works, well, that gives you the power. It turns you from just a customer into a smart, informed consumer. So I'll leave you with this question. Now that you know the rules of the game, what's the one thing you're going to look for in your next policy?